Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming your way with the market recap for Thursday, the 29th of November. It was as exciting as maybe yesterday was. Today was about as boring. Not a whole lot happening here today as we just kind of digested yesterday's movement. Maybe traders, they say they're looking ahead to the G20 summit, so I don't know if that's true or not, but we'll go with it. So I never trust the news. I always trust the charts. So, like I said, fairly uneventful day in the market. Not a lot of earnings, at all coming out tomorrow morning. Nothing really huge note to bring up. So kind of done for the most part with earnings for the week. I'm looking at kind of what happened today. You had Dollar Tree. They had their earnings. It was kind of an interesting one. I just thought I'd share this with you. About 6 o'clock this morning, Mountain Time, 8 a.m. Eastern, before the market opened, Dollar Tree was down about 4% in the pre-market trading. I know it reported yesterday after the market closed, and the initial reaction was down. And then somewhere around, a little bit before the open, folks changed their mind. We ended up gapping up to the upside and running fairly nicely on that earnings. So it's kind of a mixed earnings report from what I gather. I didn't dig too deep. I just found it really interesting how it went from looking like a gap down to ultimately a gap up in what seemed like, to me at least, it was early. I was on my first cup of coffee, but it seemed like a pretty quick amount of time. So, but a really fairly uneventful day in the market. One thing worth noting is we did sell off the last hour of the day pretty much everywhere today. And good afternoon, Ed. Good to see you as always, my friend. If you take a look at really any 15-minute chart, we'll just use the S&P here. But really all the indexes look this way. The last hour of trading, the last 2 hours, really this last hour, we pretty much sold off all hour long. The hour prior to that, we kind of had a little bit of a pop. So we really didn't go anywhere in those 2 hours, but I do always think it's worth noting, how it felt, how it looked as we got into the close. We definitely lost some momentum the last hour of the trading day, for whatever that is worth. As you look at our charts, though, they're going to be relatively unchanged. A lot of back and forth, as you can kind of see here on the S&P 500, but really hasn't gone anywhere from where it was yesterday. I don't mind that we took a day off, that we decided to have a breather today. Of course, maybe some people did, but I always, I like things to consolidate for a little bit or to hang out some. We still kind of have the multiple levels, our 200-day moving average, our falling 50-day moving average, our real major, at least in my opinion, resistance point. We're still about halfway there. So not a lot has changed over in the S&P 500 here today. Really not going to see too much of a difference in the NASDAQ, although, we kind of started to stall out in that general ballpark of that old breakdown point. I don't think that's a huge deal, but I don't think it's a positive sign either. So if we kind of look at it, we kind of started to see the shorter term averages start to act as potential support catalysts for us. You can kind of see here that we're kind of just sitting, use that 20-day moving average as our support zone on the NASDAQ. Our 9, that short term average, we talked about this yesterday, these things will start to catch up, especially if we get, 1 or maybe 2 more days kind of like this, where we don't see any dramatic, price movement one way or the other, to potentially act as some support catalyst for us as well. Overall, unlike the S&P, not a lot has changed. I'm going to feel this way about the NASDAQ until it breaks, what I consider some resistance. But ultimately, we still look a lot like a retracement in this, right? If we take every emotion and opinion and everything out of it, we're still making those lower highs and lower lows. And that's definitely something that we want to be mindful of as we go into next week's trading, I think. Over in the Dow, much like the S&P, we are kind of in that range. We're kind of flat. Not a lot happening here today. I mean, it really was a very uneventful day. You had healthcare breakout, as we'll see, but that was about as exciting as it got, I think, today. It almost felt like it was Thanksgiving. It could have just took the day off. So over in the Russell, showing a little bit of weakness relatively, but again, hasn't really changed much from a technical point of view, in my mind at least. We're kind of snowing out here. Looks like my internet's not enjoying the snow. After rallying up, we are working in that 1540 or approximately 1540 range, which I at least will consider a fairly reasonable level of resistance. Obviously, there's just a ton overhead on the Russell right now. So on the one hand, I understand folks who are willing to be saying, Frank, we got a double bottom here, and I can't really, it's not confirmed in my mind, but I can't argue with the thought process behind it. I still personally think that looking at things within the S&P and the Dow with a little more clarity as far as, hey, we're neutral or something along those lines is more comfortable for me, at least. So again, ultimately, let's see if we can get a retracement, see how things develop. But the thing I hate the most about the Russell chart is it's just, I brought this up before, along the way, is there's just levels of resistance after levels of resistance after levels of resistance that can cause it to fits, any rally it has. There's just so many technical reasons to potentially sell. It makes one move, it's right up to another level. And I always hate charts that look like that. Over in our sectors here today, nice little run for our material sector. And boy, yeah, my internet, it is snowing where I'm at, and my internet apparently is, it's been fine all day. I guess if you're going to, throw a fit, wait till the market's closed, but wait till I'm done with this, if you would, please, internet. So, but we had a nice little rally, kind of continuation off of yesterday's buying in the materials sector, which I thought was interesting. This is an area that I do, personally want to like as from a bullish point of view. So seeing some upward movement was definitely a nice thing. We're approaching this, 50-day moving average and a previous swing back here. So we have some overhead resistance. And I think we have a pretty clear idea that this is a big deal. We've been looking at this area since last week, right? Even before we got there, we were looking at that as a potential support zone. I think we can be sold on it right now. At least that's how I'm going to approach it. As long as that holds, I am going to have, continue to have, at least some bullish interest within this sector. I'll be careful, and I don't love the way that the sector chart looks. Maybe we've got lots of overhead, but that's what happens when we drop a lot, right? We have lots of challenges to break. Speaking of challenges, over in our energy sector, ran right into that 20-day moving average after really showing some nice movement here today, kind of trying to get folks to believe that breakdown that we saw, last week was just a hiccup, a failed breakdown attempt. Of course, we ran into that 20-day moving average, and that was kind of the end of the road for today, at least. As long as we hold, I was looking at this thing, and I could understand, honestly, if we see downward movement going into it from a bearish perspective. The reason I don't think that's a great play, at least when we're looking directly at the sector ETF, is I have just watched this all year. I remember, I brought it up before, but I remember watching this back in the late winter, early spring. We've seen it time and time again, and this 65 range has just been so important that I would just feel it's best to clearly break below that from a bearish point of view. But there are potentially some interesting bearish setups developing in this sector. Of course, if that isn't a concern of yours, we certainly, no doubt about it, are continuing to make lower highs and lower lows. So on the one hand, it looks a lot like a bearish retracement. On the other hand, I'm a wimp when it comes to support and resistance. I'd rather be wimpy than aggressive. And I know that's not how everybody likes to trade, and that's okay. Over in the financials, definitely one of the areas that fared the worst today, although we didn't really change dramatically on our ETF chart. We are potentially developing what Coach Mark and I talk about as a pinch, where we kind of get stuck between a couple of moving averages. Right now, it's the 20 and the 50. I expect, as long as we show relatively moderate movement, over the next day or two, the 9 will kind of get back above that 20 in the next couple of days if we are relatively flat, ultimately potentially creating a little bit of a pop in next week. Don't really have a lot to say here today that I didn't say yesterday and the day before and the day before. This support zone holding, that was important to me. I think that if I'm looking bearish, I think there are better places out there to look. We can also start to, and again, we're not quite there because we haven't taken out resistance. And here's my terrible drawing skills on display, but that will kind of work. I'm terrible at drawing lines, you'd think, after all these years, but nope. We're starting to develop that higher low. That is what can be exciting, for this pattern is, and we're seeing in a lot of things, not just the financial sector, creating that higher low working into some potential resistance, taking that out, that is, certainly a positive thing. So I'll continue to respect this support level at 26. Right now, I wouldn't mind, generally a pullback within the area, but I am open to breakout type of trades, as long as we hold that support level. Very similar, it wasn't this way a couple of days ago, but a couple of days ago, the chart looked different, right? Here we are on the industrials after going sideways all last week, breaking out yesterday, with the market, but really able to carry that over somewhat effectively here today. As long as this breakout point holds, I think we look at this through overall bullish eyes. Personally, I don't think we really look at it overall bearish eyes until this support breaks. I still think these two areas that we were looking at before we broke out are the same price points that are important here today from a technical point of view. But again, another one of those that's subtle, and it's not happened yet. So we can only, project, what we'll do if it does happen. But another one of those potentially placing that higher low, building some momentum. Of course, let's see what happens when the sellers do come in, because eventually they will, right? Over in tech, again, it's just been such a rough chart that it's not terribly surprising that it was one of the weaker areas here today, as it kind of worked into that 20-day moving average, and there's a little bit of selling early in the market. Not a whole lot has changed. Again, I think when you look at this chart versus so many others, this is the retrace, one of those retracement areas. Again, broadly speaking, there I'm sure are good potential bullish opportunities within the sector, but as a whole, you're just seeing a lot of things that look like bearish retracements, reflecting something that looks like this sector ETF. Much like the NASDAQ, that will be kind of what I will be looking at as I kind of start my browsing for next week here tomorrow for trade setups. I'll be looking at that from a bearish perspective. But again, I can change my mind if we can create a higher low. Once that bearish move does happen, if we create that higher low and start to show some momentum building there, I can definitely change my mind. But as of today, still, again, just looks like a retracement to me, at least. Caught up in the market, good for it and good for people in it. But I would be weary of that as a bull. Not so weary of the staple sector as a bull, as it continued the momentum from yesterday and the day before, working closer, but we're still a ways away from that resistance level way up here. Not a whole lot to say about this chart that we haven't said many times before. It continues to be a place where money is willing to come in. We really don't have any technical challenges until resistance, and then we'll kind of maintain as long as we hold support. We should be trying to work our way back up to resistance, maybe even through resistance, at least according to the trend. Utilities, they move. One day I'm going to think of something more fun to say about utilities on days they do this, but they moved today, but they went nowhere. As so often been the case, as of late, we continue to see, what appears to me to be a lot more volatility than I've come to expect over the years in the utility sector. We're seeing, more movement on an intraday basis, I think at least, but we're really continuing to fight at that zone of resistance. And I think maybe one thing that's happening is a lot of folks kind of feel the same way. It's got that little bit of a bearish bias. We've seen it, do a lot of things, making higher lows. We've seen it try, a lot of those individual charts do look like they're in pretty good upward trends. And I do think it's fine to trade within the sector that way. But we don't even know where to call it. Is it 55? Is it 55.50? I don't even know where to call the breakout. I'm just operating under the assumption that I'll know it when I see it, because, I was willing to call it back here with any momentum. Didn't happen. And of course, after seeing its behavior as of late, it's going to take more than just a close above 55 to get me to think it's breaking out. And I think maybe one of the problems that the chart's having is I'm not the only one that feels that way. It's sideways with maybe a wee bit of a bullish bias. And I think most people have that general, view on it, but none of us know exactly what to do with it overall until we get some clarity there. So I'll continue to be monitoring those same two price points, as has been the case for, what seems like forever now. We were able to take out resistance over in the healthcare sector early today, rallied and really ran. It was a very strong day overall. Did get caught up in the late day selling, like pretty much everything else in the market. So we did close well off of our highs. I would have liked to have seen it, pull back a little, it consolidate for a few days, much like Coach Matt. I don't love when we're kind of extended and breakout, I'll still call it a breakout, and I'm still okay with it. I think Matt likes it less than I do, but I would prefer to get to resistance, hang out for a few days, and then break out. Then, when you move straight from support all the way to and through resistance, it just to your eyeballs at least looks like it's extended. I'll still treat it as a breakout. If it pulls back, I'll be very interested in pullback opportunities in this area, even if it pulls back, as early as tomorrow, and doesn't hold this breakout point. That will be kind of the first area line of defense that I'll be looking at. But if we pull back a little bit further, let these moving averages catch up, yeah, I'm okay with that. So I expect when I look at my watch list going into next week, there's going to be a few healthcare stocks in it. So as there always is, I'm not shy about liking the healthcare sector. Over in discretionary, again, much like the NASDAQ, it looks a lot more like a retracement area than a potential reversal or double bottom type of an area. We did see some selling start to move back in. So let's see what happens. Much like the tech and the NASDAQ, if we want to pull back, create a higher low, we can change our mind really quick. And what I'm ultimately, and this is an area that I've said before, I'll say again probably, that from a Christmas rally point of view, I'm open to. I just need it to ultimately break some resistance. And so when it wants to pull back, and if it decides to pull back and make that higher low wherever resistance is, you can count me in as a potential bull discretionary sector, but that has to happen. As of right now, looks to me a lot more like a bearish retracement. Again, anytime you think about these things, just go look at them on a shorter term time frame, and you can see there's really, during this run up, there's just been no real good selling opportunities for the bears. But if we just think about this hourly chart as just a chart, if this is what we trade, if we were to break support down here, that would look a heck of a lot like a double top, right, on this hourly chart. That would be a bearish signal to those intraday traders. Let's see what happens when we get that challenge, because since we've hit our bottom point, it's really been challenge free, right? And that's always what I want to keep in mind when it comes to stocks that are in these bearish retracements. You have to be challenged before I'm willing to get on board with you. And sometimes breaking down on intraday can help you with that, I think. Over in real estate, just kind of continuation of what's kind of been happening there, kind of working, still kind of hanging around our kind of swingish resistance level with our overhead around 34. But really not a whole lot has changed over there in our real estate sector. We were able to see a little bit more upward movement in the communication services. But again, just like tech, just like discretionary, you've not broke resistance on the daily chart. You've not been challenged yet during this run, at least on the intraday chart. Let's see what happens when that develops. I think you can find better areas as a whole if you are looking for bullish opportunities. Because again, I don't ever want to try to go against the trend. That's just harder than it has to be. Going with the flow is just so much easier than trying to pick the reversal point or the bottom or however you want to word that. But you do have to respect, it really was able to do a few things that we've not seen it do for a while, right? It was able to break through the old support level, push through as resistance, and closed above it. That was even before the market had its day yesterday. Yeah, we got carried up in the market yesterday, I'm sure, to some extent. That's okay. We're now working into those averages. And we do want, and this old low back here. So this should be a challenging area for it. Again, when we kind of think about this area right here, there was just some space, right? There was, if we were able to close and hold this point here, until we worked into these averages and until this old support level, there wasn't a lot of technical catalysts. But you got to respect what it's done here today. But of course, I'm going to be looking for bearish retracements in that. I can already tell by looking there. Over in the dollar. Again, one of those type of days where we didn't do a whole lot. We did see some movement. We're kind of hanging on that rough trend line that we're seeing right here. For me, again, not a whole lot has changed. This trend line and, as a zone of support, will kind of the first line of defense, really the next level. And I think the primary level to be looking at is $96 right now as the potential turning point, so to speak. I think as long as that holds, we're okay. We are, it appears to be slowing in momentum in the dollar, but, that doesn't mean it has to be over or anything like that. But holding the support level today, I could see bulls being potentially interested in coming off of this, so we obviously don't have a great candle to support, an entry tomorrow, but we do have, plenty of opportunity and days gone by that it's kind of come off of this zone that I think we can watch for. BHD. When you look at the charts, I always start with the daily chart. If it's brand new, I'm going to start with the daily chart, and that's kind of how I'm going to primarily build the trade. Then I'm going to always look back to a weekly chart, because that can really change the way things look. Because sometimes there's old resistance or old support that you're just not noticing on a daily time frame. So one of the first things I always do is go look at a weekly chart if it's something I'm looking at for the first time. And then types of candles. Yeah, I just use candlesticks on a regular basis. Yeah, and then of course we'll look at different time frames too. I'll kind of start with daily and look at the weekly to make sure I'm looking at those major, support, resistance, trend lines, and then I can go into the intraday to kind of get a bird's eye view. I can go into the intraday to kind of create potential entry opportunities on pullbacks as well. But the primary chart I'm going with is going to be a candlestick chart on the daily time frame. So yeah, just a good old-fashioned boring candles. There's nothing fancy about me. So I am a pretty boring guy when it comes to this stuff. Over in the gold market, so I'm glad. Thank you very much. I'm glad it was helpful for you. A little bit of upward movement. Again, some folks are trading into this on the intraday, and I think that's perfectly reasonable, and I certainly understand that. From a swing perspective, I still have a hard time calling it anything but neutral. And I think 1240 is the break that a lot of traders, and not just me, but I know just me, is looking for that as a breaking point. But we are kind of seeing some upward movement. We are at a little bit of an intraday resistance level. I think you can look at it from an intraday point of view, from a day trading type of point of view. If we take out resistance up here, there could be a little bit of room for us to run. Now it's going to be hard on a swing trader's chart to trade that, because a good chance it would happen all within one day as we work into that 1240 range that's really been resistance for us. But that would be a little bit of an intraday breakout if we're able to see that again, potentially a higher low. We saw this kind of when we looked at the weekly chart a week or so ago. But if that were to happen, we'd be making those higher lows with taking out resistance, showing a higher high. So it could be a short-term intraday opportunity there, I think at least. But swing wise, I still think it's the 1240 that we're looking at personally. Not a whole lot different of a view when it comes to silver. We're not as close to that potential intraday breakout point, but I do think we could look at it the same way. Again, for me, these metals are in neutral trends. They're not they're not showing any strong signals either way, and until they are, I'm going to continue to treat them as neutral. Like I said, there are interesting intraday opportunities if you're trading the metals in the futures market. That makes a lot of sense. There have been some interesting setups for sure, but swing trading, they've just not been great swing charts in my opinion, at least. Over in natural gas, another fairly volatile day as we kind of go back and forth. We are kind of developing what maybe appears to be resistance at about 480 right now. Is still volatile. And I still think, it makes it difficult from a traditional swing. Although that's easy to say in hindsight, we should just bought the pullback, buy any pullback, right? So, but not a whole lot has changed here today. Still holding up towards the top of its range at below that, obviously not at 480 right now, but it looks to me like that is starting to develop as kind of the general zone as a resistance level. I would like to see it, kind of pull a utilities for a week or so, just hanging out up here at the top, and then break out, maybe 2 weeks from now. I could get behind that, but we'll see. I'm not going to hold my breath. I've been asking for a lot of textbook, trade setups in natural gas on a daily time frame lately, and not really got any. The best one we really got was this one back here, where we had a 4-day consolidation before a break on a Friday, right? So that was about as good as it got. And lastly, over in crude, 50 does hold up once again here today. What I'm really excited and really interested in seeing, because I think like a lot of people, I think if we see it break below 50, we think that's another bearish signal, another potential opportunity to go bearish. I don't think I'm the only person who thinks like that. We can hang out for a while though, and it is okay. I'm perfectly fine with it getting boring and dull and just hanging out and doing nothing for a bit. But what naturally happens is these short-term averages are going to get closer and closer and closer, putting even more pressure on it to make a decision. So I do continue to think that 50 is the number that we're watching there. I wouldn't dare buy it off of that, but clearly now for a week, we've seen people buying it off of approximately $50. We've seen it stop. We've seen it bounce. We've seen it stop. We've seen it bounce. So, folks are willing to buy it off of $50. I would guess they're probably more of the intraday variety. I don't know that, but I can't imagine an investor wanting to buy right here. But hey, not everybody's me. I can't imagine me wanting to buy right here. That's for sure. But I think we continue to watch 50. I really hope we get another day where either up a little, down a little tomorrow as we work into next week. And hey, let's see a breakdown of $50, Tuesday or next Tuesday even. But we'll see where it goes. I don't know if we should hold our breath there. Obviously, I have a hard time seeing how you can make any bullish argument other than it appears people are willing to buy it at 50. And while that is an argument, I don't think that's nearly enough of an argument to actually buy it. So call me old-fashioned. It was really a fairly uneventful day. As kind of exciting as yesterday was, fairly uneventful. We did get a little bit of a break over in the healthcare sector. So that's something we are shaping up for some interesting retracements in a few areas as we go into next week. So it's going to be interesting. I always browse through the S&P 500 on Fridays. That's the thing that I like to do. That's how I have a good time on Fridays. So throughout Friday, I'm kind of going through the S&P 500, kind of starting the weekly charts, then looking at daily charts to find trade setups for next week. I'm looking forward to it. I always look forward to it. I'm a chart nerd, but I'm really looking forward to it tomorrow because I expect to see some really interesting breakout candidates, some really interesting bearish retracement candidates, and I'm sure I'll find some other things too. So it should be fun. With that, ladies and gentlemen, as always, it is certainly my pleasure, and I do appreciate everybody's time. Be sure to subscribe to the channel and hit that notification bell if you haven't already, so you can always be alerted to anything we got going on over here. Be sure to follow us over at Tackle Trading on Twitter, and if you haven't yet, make sure you head over and vote for what you want to see Coach Matt and Tim go over in the halftime report tomorrow. They got a few options as far as what the halftime crew wants to see them teach. So make sure you go over there and make your voice heard and throw in a vote. I'll probably see some of you in the halftime report here tomorrow. As always, guys, it is certainly my pleasure, and I do appreciate everybody's time. You guys get out of here. Have a great afternoon. Happy trading, and I will see you all in the next one.